All right, all right, all right. Welcome, guys. I am super excited to be here. What I believe with a legend in the tax industry. I'm super excited for our guest to come, take time out of her busy schedule from serving the community, serving the 1% of the world in terms of success, and always giving back to, the next person to help them have tremendous amount of success in life. I've been watching her career over the last few years just catapult, and it's only because she really puts the work in. Barry has a lot of due diligence, is a woman of integrity. Not only is that, she's an amazing mom and grandmom to her grandson, and believes in legacy, believes that everybody should win, and just really taking a lot of things to the next level. And so when I reached out to her to, be a guest today on this platform, without a shadow of a doubt, she said, T, I got you. And she's always ready to pour. So without that, without further ado, I want to introduce you to Miss Trudy Howard. How you doing today, True?
I'm doing good. T, thank you so much. That was such a lovely introduction. I appreciate it.
Awesome, awesome, awesome. So I'm excited to have you here. I'm gonna get my pen and paper because I'm gonna be taking more notes than anybody. Okay, but
Okay.
before we dive right into helping real estate investors really maximize their profits, can you just give us a little bit of background about yourself? A lot of times with people of your success and your caliber, they think you come from money, that you've been rich your whole life,
Right.
right? That you've been doing taxes and doing successful things your whole life. Can you just give us the real story about how you got started in life and what led you to this point?
Sure. I'll be more than happy to answer that. First of all, I did not grow up rich. I didn't grow up any type of wealth. I come from a family where no one has had life insurance. So not my grandma, not my mom. I had to buy life insurance for my mom
Hmm.
because I didn't want to have to mortgage my own home to try to take care of her final expenses. So what really changed my outlook on life, because I grew up thinking there was only two ways to make money: sports or selling that them birds. Okay, that's all I saw. But I started, I would say my first interaction with meeting black millionaires and families, believe it or not, was with Primerica. So
Hmm.
I was in the cleaners and I met this guy named Jeff Mallard. Shout out to Jeff. Jeff
Coach
Mallard.
Ballard, yes.
Yeah, he changed my entire life because he showed me what was possible. So
Gotcha.
during that time, I had continually been working jobs since 2013, and he would always tell me, "I'm telling you, true. If you just put the energy into this the same way you're doing that job, you could be successful." I was like, okay, but I saw him every day going out, being successful, building the team, dealing with rejections and different things like that. So I did that for a while, and Jeff pushed me to get my insurance license.
Hmm.
So I went on, I got my insurance license, and believe it or not, I used to really be real heavy just into life insurance, helping people who couldn't get covered. And then I moved into Medicare with the senior
Hmm.
citizens. It's such a need out there because there were so many resources that were available to them, but there's so many barriers to access those services. To You really have to be boots on the ground with your computer helping these people do things. So
Hmm.
nevertheless, so we went there, and then I got sick. I was so
Hmm.
sick. See, there was times I could not get out of my bed, and I'm like, oh my
Really?
god, I need something that I can do from home, where even if I'm in this bed, I can type with one finger. you know that's just how I was thinking. And so I had been doing taxes since about 2003, but at that time I was just doing little taxes, for my friends here and there, W 2 here, W 2 there. So while I got sick, I couldn't work a regular job because I really didn't know what was wrong with me, but I started driving Uber. So now we're moving
Hmm.
into about 2016 because I got kind of irritated with insurance because people wasn't paying their life insurance premiums, and that just ticked me off.
Okay.
So I said, let me get away from this. Let me Uber. So I was Ubering, and I would be going, I live in the south suburbs. So I'm
Okay.
Ubering from, let's say, Cow City to O'Hare and all that. So I said, well, let me find some podcasts to listen to.
Hmm.
On the podcast, I ran into this Jewish attorney, and I love him to this day. His name is Eric Green. And I felt like he was talking to me, which he really wasn't, though. But he started talking about tax debt. So tax debt really is how I built my business, helping people. I've helped millionaires get rid of $20,000 worth of debt. I've seen people with $350,000 worth of debt still able to buy properties. Yes, these are just the income taxes.
Mm,
I've had people, we did a strategy where they waited, okay, you wait a year to keep doing your little self-employment. In 2 years, that tax debt is going to fall off. They done walked away from 150,000. So
mm.
seeing that, seeing senior citizens getting their social security checks garnished, when I know
Jeez.
good and well I just helped somebody that was a millionaire get rid of 20. So that just made me want to really get into this. And by doing that, that's how I had already had a little network of millionaires from the insurance. And then online, most of my friends are millionaires. I mean, I was getting friend requests from people because I'm telling people how to save money. And I never thought
Mm,
it would go to where it's gone now. But I have doctors, attorneys, and I'm not talking. I mean, I got one doctor, he did $1 million in 1 year, but he's a specialist. So
okay.
I would say what helped was learning how to use social media and getting an office. What helped me build my clientele as far as like the diversity that I have was getting an office in a high income area. I
That was smart. That is smart.
That is my number one recommendation for everybody. And get the reviews, be out there, be in the community. But that's it. That helped me. To this day, I just talk to somebody via chat, but they go online and look for a tax preparer. I come up and we did a whole deal through chat. So
Wow.
that's, yeah, but that's it.
Wow.
Mhm.
So true. There's a lot of people right now are getting ready for the end of the year. They're getting ready for tax advantages, and they don't know who to go with from a tax specialist. And so,
Mhm.
before we get into the questions today, can you kind of give us a couple, one or two things that people should look for when they're picking a tax strategist like yourself?
That's a great question. I would say look for experience, look for the education that that person has. I write blogs, I have a podcast, I have a small YouTube channel. I give away tips on, Facebook. So you would need to know that. Now, what most people are going to tell you is, oh, they need to be an enrolled agent or they need to be a CPA. I don't agree with that because I know
Mm,
how much education I had before I started, trying to go and get all these credentials, and I'm just as good as the other person. I just haven't sat down and taken a test. So I
mm,
would say asking them, well, hey, what are some strategies that you've used before? What type of clients do you have? My clients are 60% real estate investors. The rest are just all pretty wealthy. I got a few stragglers that's been with me since day one. So it's my day ones. We're gonna stick together. I would stick beside them. But yeah, so that's what I would say. Now, um, I think one of the biggest red flags would be when you see things that just doesn't sound right. Like this, oh, I can
mm,
get you $30,000. This is a program. Nobody else is talking about that. That should kind of give you a indicator, that maybe something going on. But the sad part is because I've seen this happen. People getting, 30, 90, 100,000 is good. And the way that people sell it to them, like, oh, it's some new programs out by the IRS. They want to give you this money. It sounds believable, but now these people are in debt. So it's going to help me,
mm.
but it's sad for the
Yeah.
individual. Mhm.
Got you. That is deep. Okay. Okay. So as we dive into this, I call something you said 60% of your clientele is in real estate. And that's
Mhm.
perfect because our audience is all investors, seasoned investors, or startup investors.
Yeah.
And so for my first question, Trudy, I want to ask you, what do you think is the biggest mistake new real estate investors make that kind of cost them money year after year? What would you think of the biggest mistake that new investors make? A lot of people want to rush, get into the game. They think they live in a life. What are the mistakes that they're making on a year to year basis, new investors?
The first mistake, because I took classes because I wanted to become an investor. I'm like, I'm gonna fix, I'm gonna flip, I'm gonna do this, I'm gonna make this money. I thought it was a quick 50, 60,000 in about, 5 or 6 months. That's how it was working with me. The first thing is not really understanding the numbers and not doing your numbers. And now
Mm,
in the environment that we're in, where we got tariffs one day and prices may go up, they may go down. So you may have gotten and done your scope a month ago, but now the prices have gone up. So not
mm,
keeping up with the market, not having a cushion for what they set for a budget. So if I set 10,000 for plumbing, which that's a crazy price, 20,000 for plumbing, I need to really set aside 25,000 because anything could go wrong. You know what I'm
Hmm.
saying? So not having that cushion. And then the number one thing would be not keeping up with their expenses. Not
Whoo.
having, yeah, a separate bank account. I cannot tell you how many times I get, oh, I just, did it with my regular bank account. Oh, I just took money out of here. Oh, I just put this on that credit card. So now we're trying to get 5 or 6 different credit cards. You try to remember which one you use. Everything is commingled. You don't want to pay for bookkeeping. And I get it. I mean, bookkeeping is not cheap, you know. So now we're missing out on deductions when you could have got a little US bank account. I say them because it's $0 per month, no matter how much money you have in there. Get that little bank account and be good and keep everything separate. I'm not saying you have to become an accountant or a bookkeeping, but at the bare minimum, at least just have one bank account and one dedicated credit card that you use for your expenses.
And so, just to kind of pivot real quick, a lot of people don't grow up. A lot of us grew up like you. We didn't know money, didn't know finances, couldn't really budget the books.
Yeah.
And as we get older, we don't see the importance of certain things. And I know that you have an amazing bookkeeping service. How does
Mhm.
that bookkeeping, right, really put people on the right track? What is that service? What's the benefits as an investor of having bookkeeping?
Yeah. So the benefits as an investor is when we're doing niche, and I can't think of it right now, but we're doing tracking. So you know exactly. Let's say you're doing 2 projects at one time. Instead of saying we did $50,000 in supplies, I need to know. Well, my building on the west side was 35,000. My building on the south side was 15,000. So that's one of the benefits of enabling you to see exactly where your costs are going. When you only have one property, I would say the benefit is actually being able to see the profit. I cannot tell you how many people I say, well, how much do you think you made? I don't know. What? They don't have a clue because they never even just tracked income and expenses. So that's what bookkeeping does for you. Now, again, I was raised in the hood. So a lot of things I feel like I'm not gonna do, I can do this myself. I totally understand that. And if that's what you want to do, then we need to get pen and paper and we need to write down. You don't have, I'm not asking you to get software. I'm asking you to keep track of your expenses in a bank account and something that you spend cash for. Let's just do our little expenses. Let's do, our gas. Let's do writing down our mileage, which we'll get there soon. But
Okay.
that's what we need to do. So when does bookkeeping become important? When they want to get a line of credit. Now you
Mm.
want bookkeeping, but the expense to do a year or 2 years of bookkeeping is overwhelming, in some cases. If they need to get a house, there are different programs, but now you want to get a house to live in. You're not dealing with a hard money lender and they want to see financials because you said you work for this company, or we're going to add this to your W-2 income. We're going to
Hmm.
need that profit and loss, and we're going to need that balance sheet. So what I have noticed with bookkeeping is important to have, like I said, to keep up with your actual costs. So as you continue to do projects, now we can come with some real costs instead of just guessing because we tracked our expenses prior to this.
Woo, you
One
bad.
of my clients, he's a general contractor, and I'm seeing like you paying this guy over $180,000 a year. Is he cutting you a deal? But now I know, right? That's how I think. But now we have a report. Hey, in 2022, we paid you boom this 23, 24. Based on that and based on this continued revenue, can you start lowering our prices by 15%? Why not?
Mm,
But that's
mm.
what bookkeeping will allow you to do.
I love it. I love it. And definitely our audience at the end, we're gonna make sure they can reach out to you, get the information they need to contact with you and set up their bookkeeping services.
Absolutely.
My
And I
sister.
try to be reasonable. I'm sorry. I try to be reasonable because what I do is bookkeeping based on revenue. And some people don't agree with that method, but I do. So now, if we are a fix and flipper, really their expenses should not be more than maybe Home Depot, Wayfair, Gym Electric, some different things like that. And it shouldn't be that much because you're paying a general contractor to get all of those things. So they should be getting materials and supplies. So that's something I could do really inexpensively just for a flipper, just to keep up with these expenses. Now, what I cannot do inexpensively is you refuse to get a separate bank account and I got to
Hmm.
go through 200, McDonald's and the lights and the movie.
Ubers and
Uber. Oh, Uber's always there. Yeah. So now, it's a lot of extra work. So
man, oh man, you are preaching to the choir today because I've been through that, and I
yeah,
wish I would have had your services a lot sooner. True.
I know, right?
Which brings me back to my next point: foundation. And
Mhm.
when I talk about foundation, a lot of investors they get out here, they start doing real estate, but they don't know what type of structure and entity they should set it up with. So,
That
True, in your experience dealing with investors and helping people with their taxes, what type of entity do you recommend from a new or seasoned investor to structure their real estate in for tax purposes?
Right. Okay. So I have to say this little disclaimer. This is not legal advice.
Okay.
However, I work in tandem. I have two attorneys, and I can tell you where this came from. Just real quick, I want to tell you. So my dad had a property, but my father was married. And when he passed away, the deed that they had signed, everything went to her. So I got nothing because that his half that he had paid all his life was no longer a part of his estate. And
Mm.
going through that and thinking, okay, when my daddy passed away, okay, I had it rough, but I know my daddy left me something. And then to find out I didn't have anything, it was heartbreaking. And it was simply because over this deed that he signed. So
Who?
I started going to events and different things. So I met attorney Mario Reed. You may have heard him. Okay.
Yes. He was my attorney as well.
Okay, yeah. So I went to an event, probably 2016, 2017, where he was still working for the state of Illinois, and he
Okay.
was talking about a TODI, transfer on death instrument, because I wanted, if I got $5, I want everything to go to my daughter and not to my grandchildren. That being said, I have learned so much from him, and then other attorneys that I work with in real estate, because we always have to take continuing education classes. Well, a good tax preparer takes continuing education classes, and so what I would say is I say start off with an LLC.
Start off.
If
Okay.
you talk to Mario, the attorney, he's going to tell you to start off with a trust. So from a tax thing, I said LLC. You can always get your LLC put into your trust. Now you're going to have a lot of people who are going to say, "Oh, I need to get S corp," because we hear about this S corp. They make little, quick videos about it. It sounds so great. Cut your taxes in half, and you're not going to pay self-employment, and that's true. But there are a lot of things that come along with that, it's such as
Yeah.
payroll, bookkeeping. So if you're not at a minimum of $40,000 net profit, we don't
Gotcha.
want to do an S corp yet. And then you're going to hear
Mm.
some people say, "Oh, you have to sign up for the S corp within 75 days." You are supposed to, but as everything with the IRS, there is an exception, and you can go back 3 years and 75 days.
Hmm. Okay.
So we set but you got to have that LLC set up as soon as possible,
Gotcha.
because the S corp is not an entity; it's a taxation status.
Hmm.
All right. Sorry about that. You
No
have
problem.
another question?
Yeah, so that was great. So now that we have the structure set up, my next question is how can investors legally reduce capital gains when fixing and flipping? Right? How can they legally reduce the gains?
All right. So I don't really consider it capital gains when you're doing a fix and flip,
Okay.
because that income is taxed as ordinary income.
Hmm.
So is it a gain? Is it a capital gain? Yeah, technically, but it's gonna. Oh, and ordinary income means like your W-2 job income.
Gotcha.
So that's how that's going to be taxed.
Gotcha.
Even if you hold it for 1 year and 1 day, because it's a investment fix and flip, you're holding it to resale. You still don't get that as if you hold stock for 1 year and 1 day. So
Mm.
the way that you reduce the amount that you pay is you have to keep up with these expenses.
Okay.
That's it. So we got to keep up with the settlement statement. That's another thing. And that's when you close and when you sell.
Okay.
Because what I notice a lot of times too, people say, I say, how much was the house? 250,000. They missed the commission they paid to the real estate agent, the closing costs, the title fees,
Mm.
all of that. So now we're missing that income as well. And if you don't have a preparer that's used to dealing with investors, they're not going to ask you for the settlement statement, or they may get the closing one from when you purchased, but they may not get the one from when you sold. And if you don't remember those expenses, What are
Ooh,
we going to do? Yeah. So
okay.
that's it. Track your expenses.
So true. You may have hit on this, but I kind of want to go deep into the psychology of this. Like for investors, what systems or habits should every investor have in place so that they can stay audit ready? Right? Like
Yeah.
what type of psychology or mindset around making the money, managing the money should they have? Like what type of healthy habits should they create to just be locked and loaded for tax season?
Healthy habit is save every single receipt. Okay.
Ooh.
And
Ooh.
document, yeah, every receipt. And I want you to get this mile IQ, where you're tracking your mileage, because a lot of people don't think that fix and flippers and investors can track and deduct mileage, but you can. So that
Mm.
was one of the things where I said you need to make sure you're keeping up with that.
So
But yeah,
picking up driving to your project every day.
you're driving to your project, you're going to the bank to send a wire, you're
Hmm.
going to a business meeting to have dinner to talk about it, you're out here looking for other properties. So absolutely, we need to make sure that. Now I'm going to give you a little twist to everything. There are two forms that your business can be filed on, depending on, I shouldn't say your business, that your flip can go on, depending on if you're just a one-time investor or if you're going to
Mm.
be an ongoing investor.
Okay.
So if I'm a one-time investor, I don't want to have to pay self-employment taxes, which is Medicare and Social Security, that 15.3% on my profits. I'll just pay an income tax, and that would be a capital gain because it's a one-time deal. I got into
Mm.
it, thought I wanted to do this, decided it's not for me. I'm one and done. But if you go and you tell your tax preparer or your accountant, yeah, I'm an investor, I fix and flip, they're going to think it's an ongoing thing. So if they don't ask you, hey, when is your next project coming up? Are you planning to doing this? They may put your fix and flip on
Yep.
Schedule C, as in
Got you.
Charles, yeah, which is as a business. So now not only are you paying an income tax, but now you're paying self-employment Medicare taxes. So that
Mm.
would be, I guess when you go back, when you say, well, what does every investor do? We need to decide from day one, is this going to be a one-time deal, which you really can't determine until you go through it and see how the deal goes,
If
or
man.
if it's going to be an ongoing thing. So if it's ongoing, it needs to be Schedule C. If you just did one last year and it was so traumatic, you decided you'll never do it again, you need to make sure that your preparer is putting it on Schedule D, as in David, as an investment. An investment as I bought crypto and I resold it. That's how that should be taxed.
That's good.
Yeah, a lot of people don't talk about that. They just hear you say fix and flip and investor and then putting everything on Schedule C, and it may not go on there.
Okay, so let's get a little juicy.
Okay.
I'm seeing what's happening now, and it's a good thing and could be a bad thing. I'm starting to see a lot of joint ventures in the marketplace.
Yes.
People are creating partnerships, they got joint ventures. How does those benefit or complicate things from a tax perspective?
From a tax perspective, now you have to do a partnership return. Partnership returns are going
Ah,
to be probably $1,100, right? Now, yeah, it's expensive because a partnership, we have to track cap, and you got to have bookkeeping when you have this, because we have to track something called basis, which is a fancy word of the money that you put into the project or into the asset. Then we have to track your capital accounts. So your capital account is comprised of the expenses, the income, expenses, and income. So that has to go there. So though, and then sometimes we have to reconcile. Your books may have a different amount because, let's say, it doesn't really apply to fix and flip, but I'm going to say it for a renter. So we may decide to do I don't depreciation on section 179. And now we've done depreciation, but the state of Illinois doesn't recognize, special depreciation. So now we got to break those down. Or my tax books are different from my regular books, because
books.
of my regular books, I'm just taking straight depreciation. So if it's a lawnmower, for example, that's supposed to go over 5 years, but I decided to take it right away on my taxes, there's a schedule that I have to, reconcile Why is it that my books don't match what's on my tax return? So that's why those
Ooh.
returns, yeah, are so expensive. Then you have a personal return that you have to do. So those can range anywhere from $495 to $700 and even more. Now, what a lot of people don't know is during January through April, I'm actually a TurboTax business professional. So I don't deal with W-2s. I do S corp, C corps, and partnerships for TurboTax. So a lot of people think, oh, I just do it myself. And I didn't know it's pretty expensive. Even trying to do it yourself is almost 12. You don't see me, do you?
Okay,
Me?
yep, you good. You good, True.
Yeah.
Yep.
Okay. So even trying to do it yourself, you're gonna have this huge expense. You're not gonna know the questions. I mean, we'll help you, walk you through it, but you're gonna be calling every 5 minutes because of the way the questions are. And I've saw a lot of people mess up. Then they have to go and try to change the tax return. Then that's delaying the personal tax return. So you might as well just hire a professional. So I would say a JV limits my financial liability, but will I have some additional costs? I will, but maybe that's good to have that little additional cost so that I'm not taking on a potential $50,000 loss all by
Most.
myself. Yeah,
Mm.
yeah.
And okay, when we talk about loss, and I believe you kind of hit on this, but what do you think is the smartest way for investors to handle repairs, renovations, home improvements from a tax perspective?
Okay, so when we talk about investors for a fix and flip, the number one that let's just clarify what a fix and flip is. I bought a property, I'm going to fix it up, I'm going to resell it to somebody else. I don't plan on having tenants. I'm not going to live in it. It's strictly for me to, like, if I was buying a car and reselling that car. So everything you need to is a repair, and everything goes into the basis or your selling cost when you get ready to sell it. So I have a
Mm.
lot of people who will think, oh, I did all these repairs I bought the place at the end, let's say in October of 2023. And I spent $50,000, but the place wasn't ready until 2024. That's when I sold it. They want to write off the 50,000 in 2023, and you can't, because that money, we're gonna save it and we're gonna bundle it all up, but it's gonna be deducted from when you sell the home, and that's how you want it
Got
to be
you.
deducted, right? Because I don't want to have, let's say that $50,000 loss could reduce my W-2 income. That's great, and I got that little benefit. But now next year I got $300,000 because I took my $50,000 over here. So now I'm being taxed on this entire $300,000 profit. So you need
Mm.
to, yeah, realize and understand when you're doing all this stuff is not a write off on your taxes until you sell it on a flip. If I'm investing for an apartment or a building or a house that I'm going to rent out, anything $2,500 and under, you can write off immediately. Anything over that, typically, and there's things called like safe harbors and all of that, but anything else. Let's say I get a new roof, and that's 20,000. I can't write off that 20,000 on my rental. I have to
Mhm.
depreciate it, which means spread it out over time. Over 27 and a half years, I'm taking chunks $1,000. Now, there are some things called cost segregation. So you'll hear people say, oh, yeah, we just do a cost seg. Usually that's more for commercial properties, because now I'm going to go in and say, oh, well, carpet has to be replaced. Windows are going to be replaced faster than 39 years. Railing. So you get an actual professional that goes in, they kind of like engineers, break down the property and say what components are 15, which ones are 30, et cetera. And they take that depreciation ahead of time, if that
Okay,
makes sense. But
that
the
makes
biggest thing is stop thinking that just because you spend all this money in 1 year that you can write it all off. You cannot write it off until you sell the property. Yeah.
wow. So I didn't. Okay, you got to sell it first,
Yes.
then write it off
Or fix and flip.
or fix and flip.
Uh-huh. Now, let's say I got my flip, the market changed. Now I'm gonna pull out some money since it's worth something. I'm gonna refi. I'm gonna pull out that money, but now I have to turn into a rental. Now we still got our costs. Now we can start writing stuff off. We can start writing off repairs and all of that. And one important thing too is I see a lot of people that'll just get a scope of work. And we're always supposed to get a scope, but we also need to have detailed costs. Because if I got a scope that's giving me 80 different items and you just tell me it's $80,000, when you give it to the tax preparer, I can't write off $80,000 supplies, 20,000 I need to put down what was a repair, what was a improvement, because that flip might turn into a rental. So we need to make sure that the contractors are still giving us an itemization on how much I'm being charged, per fix, and not just a scope and a big bill, if that makes sense.
Mm,
Because
that
I've
makes
seen that too.
perfect sense.
Yeah.
So, okay, so we got the rehab question done. What about how does investors move from a tax perspective when we talking about hard money or private lending then?
What do you mean? As far how do they? What do you mean?
Like how do they approach it? As far as from a tax perspective, if you're using hard money, private money, is there some pitfalls that can be in there regarding taxes or no?
No, you just have to make sure to get that interest. You won't believe how many people,
Interest.
yeah, they never think that that interest that they're paying on that loan, that is an expense. And I've
Okay.
had to tell people, how did you finance this? Oh, I did hard money. Where's the interest you paid? Oh, so and like and people don't know, and I probably should. I know I got a little bit of a smart mouth, so forgive me. But what I may think is knowledgeable, everybody should know. Everybody does not know. So let me redo that. You need to make sure that you are getting your interest on any type of hard money loan. If you took a HELOC, different things like that to finance.
Hmm.
Now I'll tell you what I never recommend an investor to do, especially one that's closer to my age. Once you start knocking on 50, don't pull that money out of your 401k trying to do a fix and flip thinking that you're gonna get your money and everything's gonna go right. Something is gonna go wrong. So I would say try to get a personal loan or something like that, but don't start pulling money out of that retirement, you know. Unless you can take a loan and you can work overtime, but with the way these jobs,
Don't
you
do
know what I'm saying?
that.
Don't take that distribution. Yeah, no.
So a couple more questions. So you had hit on it regarding depreciation. I think that's we don't talk about that enough as far as in business, right? How does depreciation really work, True? Like, and how can real estate investors use it as an advantage?
Okay. So a fix and flip person is not going to take it because depreciation is what? Spreading my cost out over a period of time.
Okay.
And so because of fix and flip should be done in 6 months to a year, there's no time to spread the cost out. So we're not going to depreciate that there. For somebody that's going to say, well, I just want to buy me a multi-unit or I just want to start with a single family home, we're again spreading costs over a period of time. Now, let's say I buy a car. This was real big a couple of years ago. There was a section 179. So I go out, I buy a G Wagon, and I'm gonna write out the whole G Wagon, $180,000 in depreciation against my income. However, a lot of people didn't even have $180,000 of revenue
No.
generated.
Oh, got you.
Take the, you know what I'm saying? So it becomes a mute point.
Okay.
But for depreciation, it can be beneficial. There's something called bonus depreciation, and I like to take bonus depreciation a lot of times for my people because bonus depreciation is, well, instead of 5 years, I'm going to take the next 3 years upfront. And it's not like that, it says it's in percentages, but I'm going to take that now. So that is something that I recommend for investors.
Hmm.
Little things like laptops. You might have, there's $3,000. I heard somebody say they was getting a MacBook, and those things are like $3,000 and up. So the way the laws work, you would really be required to spread that out over a period of time. But we can go ahead and take bonus depreciation on that. So I wouldn't get so much stuck on depreciation because it's over a long period of time. It's really pennies on a dollar. I would be looking more for repairs, little things I could write off immediately, hiring my children in a business because that's going to give me more bang for my dollar. Because with depreciation, there's also something called depreciation recapture.
Come
So
on.
yeah, so let me tell you about this. So you have your rental property every year. You writing off a portion of it. You go to sell your house. They say, "Oh, well, now we gave you all those write-offs, but we're going to take back the tax deductions that we gave you, and now you stuck with a bill up to 25%." That's what they don't talk about. So the way most of my high income earners do, It's a running joke. They say you buy a property, depreciate, and die. So they just keep passing it to their family. But not everybody can do that. Some of us need to sell the property. Anything could happen.
That's why I
This
was
is
just about to ask you, True. So to spin off of that, you just hit on it. Studying wealthy people at the end of the year, it just seems like they start buying all type of stuff for tax purposes. Now,
correct.
what is it? What is the strategy to that? Like, what's some like if somebody is killing it all, it's June now. Let's say
Right.
somebody been killing it all year financially, they about to kill it the next 6 months, but it's always these last minute strategies where they got to go deploy some money to kind of reduce their tax.
Right.
Um,
So remember that was big during COVID and when Trump came out with the Section 179 and all of that. So that's another thing with taxes. It's a moving ball. Everything is always changing. So
okay.
right now you can't take 100% on a vehicle, but a couple of years ago you could buy that $180,000 vehicle Section 179. And so now instead of me being taxed on $500,000, I'm going to deduct this 180 and I'm only going to be taxed on 320,000. So that's what that is for. When you see people, they have really generated a ton of revenue and they need to reduce that business revenue. So I can't do this if I'm just working a regular W-2 job. I have to have some type of business or be an investor. And now I'm trying to buy something that I can take a large expense and deduct it from what I would be taxed on. If that
Mm.
makes sense. But
So
like I said, because it's not as big now and the tax laws are changing, I wouldn't be really banking on that because you're still taking on a bill, right? That 180 didn't go away. It wasn't like they gave me dollar for dollar 180,000. It just reduced what I was going to be taxed on. So
okay.
that's a tax deduction. We want to look more so for tax credits.
Credit.
So right,
Mm.
the energy credit, because now you're giving me dollar for dollar,
Okay.
right, for my money, not just a little tiny percentage off. And like
Hmm.
I said, it's constantly changing. So depreciation sounds good, but because it's always changing, you have to really sit down and look and see if in your situation, is it going to make sense? Because not only did I take that 180 in 1 year, now what happens the next year? Now I made 600,000. I don't have any write-offs. I'm not going to go buy another car. I'm not going to be, you know what I'm saying, $360,000 in debt trying to write off 180.
80.
So yeah,
Ooh, talk
yeah,
today, True.
I know, right? So
Ooh.
that's what you got to think about and look at. And that's why you need a tax professional that knows and is not just so we got to write this off. We got to write this off because that might not be good for long term because you
Mm.
might be generating more revenue,
Okay.
right? Does that make sense?
So last two questions.
Mhm.
Well, the first one is, and we kind of shared, we hit it on several times, but I want my audience to know what's some overlooked write-offs or deductions most investors miss that you've seen in the fix and flip or even the buy and hold. What do you think the things are most overlooked that they didn't even write it off?
Fix and flip, home office, and
Mm,
mileage.
that's
They
it.
never track their mileage. Now, let somebody be selling lemonade on the corner. They're gonna write off that mileage.
Eliminate.
But not investors. They never thought about, oh my God, I did have to go check on the property. I did have to make sure they get the permits. I did have to make sure they was getting their draws and all of that. Never track mileage. So they need to do the mile IQ. And
Q.
then a lot of investors don't think that they have a home office, but you need to create one. And the reason you need to create one, it doesn't have to be a real office. It has to be a dedicated space that you use specifically and exclusively to do business, right? So for a fix and flipper, again, that's checking Redfin, Zillow, that's doing comps, whatever little comp you can do, not a real estate comp, but doing comps of the area,
Yeah.
looking at the new prices. So in that area, that's my home office. So when I leave my home and I go to Walmart to get some filters for the properties, I got to get some air filters, right?
Okay.
So I go and I do that because I have that home office, that became business mileage. If I did not have a home office, that's a commute, meaning just from one place to another, and I don't get to deduct that mileage.
Mileage. Got you.
Yeah, so you always want to have a home office, but don't get stuck on number one, don't get stuck on thinking you have to own a home to have a home office because you could be a
Mm,
renter and still have a home office dedicated space, and we can still write off a portion of your rent that you're paying. And for a homeowner, obviously we can do, garbage, sewage, water. That's another thing. People don't keep up with their utilities. They don't know how much bills are. Everybody's estimating. So you got to pull the bills out, see how much they are. And there's two ways we can do. Okay, you have 5 rooms. One room is dedicated, so we're going to take 20%, or we can actually do the square footage. There is something called a simplified option. I don't necessarily prefer the simplified option, because if we do the regular option, which means simplified with the IRS, means it's $5 up to 300 feet. So that's a $1,500 deduction. Regular way means I'm getting the depreciation. If I'm owning, if I'm renting, I'm just getting a portion of my rent off, and all of my utilities. And if I have a loss, I can carry that loss over. So let's say my home office was $3,000 in expenses, but I didn't have $3,000 in income after I took all my expenses and everything. I get to hold that $3,000 and carry it over to the next year.
Next year. Ooh, wait.
But I don't get that if I do simplified home office. So, right, little itty bitty things like that make a difference. And I think the biggest thing, like I said, everybody doesn't have money. Everybody, sometimes your credit might be bad, but you just got this burning desire in your heart to get out here. And the only way you can finance this dream is to take your 401k. I want you to start a small business. I don't care if it's selling Mary Kay, Avon, whatever it is. And then from your job, because I'm assuming you left your job, that's why you're going to try to take. I'm sorry. What about that new law Trump is trying to get past, 100% depreciation? So that would just be a reinstatement. Oh, Early's got all the questions. That would be a reinstatement of the Section 179, what I was talking about, the 100% depreciation. Okay. I don't really go into stuff. It's proved in the House, but it's not in the Senate, because they're going to change that bill so many times. Once it's approved in the Senate, then I'll do a blog and a small video on it and let you know. A 1031 exchange, I did have that in my presentation earlier. So that's another thing. A fix and flipper cannot do a 1031 exchange. That would be for somebody that's holding rental property.
Gotcha.
And so what is a 1031 exchange? A 1031 exchange says, I have this building, I've been holding this rental property for 5 years, and there's no, set amount of time. It's just an investment. Now I want to sell it and buy this bigger 6 unit. So I want to sell my 4 unit and I want to buy a 6 unit, and I don't want to have to pay taxes on this. I want to roll it over into my new property. Now, the biggest thing with that is you have to have an intermediary. So you yourself cannot just sell the property, put the money in the bank account, and go buy another property and think you did a 1031 exchange, because you haven't. And that is another mistake that I see a lot of people make, thinking that they can either take the profits from their flips, go buy another property, don't pay taxes on the flip that they did because they have reinvested in another property. It doesn't work that way. So fix and flip, no 1031. Rental property to rental property, you can do a 1031 exchange. And that's one more thing. When people say Section 179, a 1031, all these numbers sound so fancy. Really what they are just sections in the Internal Revenue Code. So if you pull up the Internal Revenue Code, it'll literally be Section 179. And that's where they're reading the law. But they make it sound so mysterious.
And it goes over so many people's heads. Yeah. That's true.
For no reason. And so that's another thing for me. I hate when people use words or describe things, making something far more complicated than it has to be. So I live to simplify things and to make it relatable, if that makes sense.
So my last question, True, after being you represent the top 1% of the world, super successful people, multi-millionaires.
I'm not a multi-millionaire.
On the way, you represent them, okay?
Unless you're a prophet.
No. So you're dealing with so much.
I'm dealing with them, yeah. I deal with their money.
You deal with their money.
Yeah, but I ain't in the club yet.
You on your way.
Right.
And so building these relationships with them, what's a gem or what's a philosophy that you've kind of abstracted from their philosophy, their mindsets. Being around all these wealthy people,
Mhm.
give me something that you've learned how they think about money, how they think about success, how they think about life. Can you kind of pour a little of that philosophy, that mindset in us after dealing with so many successful people?
That's a great question. I think for the other nationalities, we're not commingling all the time. I'm literally doing a transaction for them, and so we may do some emails. So I don't necessarily know their mindset. I will say a lot of them still want to save money. Don't think
Mm,
that just because they, got millions, a half a million, the wife making 350, the husband making five, they still want a deal. So I would say
mm.
they always are looking to do make good choices with their money.
Frugal.
Yeah, they are a little frugal, believe it or not. When I'm dealing with people that are the same nationality as me, I have built more of a relationship with them. We've done more networking, and every millionaire that I know, they actually serve people in some type of way. So
Mm,
whether it was owning a restaurant, a dentist, you serving people, and so what I have learned is the way to become a millionaire is to serve a lot of people.
yeah.
Insurance, serve a lot of people, and they all have a team. So, which is something that you've been on me about, and I'm like, no, I can't. But you got to have a team. They're not all just in there flipping the burgers all themselves. You got to get to some point where you trust other people and become a team. So, and I
Mm,
know like that can be hard. I look like my dentist. I won't see anybody else. I don't care. He could give me the dentist that did the Queen of England's teeth.
you
If
ain't
it's
gonna-
not my dentist, I don't want him. Dr. Bowden, that's my guy. So
okay.
it's like, okay, I get, where I feel like, okay, well, certain people just want to deal with me. But if you want to really scale, you're going to have to build a team of people that you trust, and you have to set a system. So that's what I've learned from all of like the attorneys, because I've been trained by a lot of attorneys. I got some attorney friends. I'm multi-millionaire attorneys. They
Mm.
all have a system. It's all repeatable. Yeah.
Got you.
Yeah.
So, True, I really enjoyed this value
True.
today. But
Thank
before
you.
we go, True, the audience wants to know, how do we get started with the bookkeeping? How do we get in contact with you? Where do we need to go? What is the next step to get ready to rock and roll with Trudy Howard?
Awesome. So I am a Facebook person. You can DM me. I'm always on Facebook. If you don't like Facebook, because some people don't want to, put their stuff on Facebook, which I get, I do have a website that's howardtaxprep.com. You can Google Howard Tax Prep Chicago, Howard Tax Prep LLC Chicago. You can actually Google me, and I think it'll bring up Trudy Howard. It'll bring up my blog or something like that. But if you message me on the blog, you can email me, that works. Now I have an assistant. Most people have talked to her, Karina. She's been with me 3 years now, which I can't believe I have actually helped provide for somebody else's family for 3 years. That's just like mind-boggling to me. But Karina will take calls between 10 a.m. to 1 p.m. But
Okay.
honestly, the best way is to DM me. I'll send you a link. We do a free 15-minute consultation.
Okay.
Or sometimes we don't need a consultation. I could just show you the rates right online. But like I said, if I have somebody that's only doing 12 or 20 transactions a month, I'm a reasonable person. I'm not
Okay.
out to make a lot of money. I don't get
Right.
over on people. I'm just not about that.
Okay.
And honestly, somebody that's doing a few transactions, I might show you how to do it on pen and paper, and you just keep it.
Okay.
That's just fair. And then we talk about taxes. That may be where you need me to come in. But
Okay.
definitely, like I said, DM me, Trudy M. Howard on Facebook. Um, that's where I am, or howardtaxprep.com. Now,
Any
what I do
projects?
have, I'm sorry, I'm going to give you a little workbook for
Okay.
people, a little worksheet. I just need to finish it up. But
Okay.
yeah, yeah.
Oh, any events? That's what I was going to ask you. My closing question. Any events? Any projects we need to be looking out for you for in the future? True.
So, what I'm working on, so I'll say yes. I just have to get it together. But what my passion, and I've told so many other people to do this, is new homeowners, especially women. I'm pro woman. We don't even know how a house works, which is how the
Mm.
fix and flip class helped me. Like what you do, you have these people come in that I can see framing. I know about, oh, okay, electrical. I know where the pipe is for my tub and my water. So I really want to do classes for women that are first time home buyers. Let's talk about changing the air filter. Let's talk about the circuit breaker because a lot of us just don't know. I don't 20 amp, 40 amp. So I want soon I will have a program where we're kind of piggybacking of some of my friends in the industry looking at a house before it's built so you know what's behind the walls. So if I come into your house and your front light is out, I can't tell you I need to run electrical from the basement through the second or the third floor when I can simply just change the electrical right there and switch. That's what I am working on. So that is to come. And I'm working on a book for just new business owners because to get to be an investor, you got to generate some revenue. So I do have a book for small business owners, just different questions. So that I should be done within about 2 weeks because my newscaster client asked me for that. You didn't know I had a newscaster, did you?
Okay, look at you. So look, I'm super excited. Like I'm praying that God continues to keep you and
Likewise.
yes, order your steps. You're doing an amazing job in the community. You've been a blessing to our audiences all over the world and just doing some awesome things, too. And I look forward to working with you again in the future. I'm going to make sure you guys, this is recorded and we're going to get this out so that you guys can go back, take more notes on it, and then have an opportunity to build a closer relationship with Trudy, one of the tax legends in the industry. So I want to thank you guys for hopping on today. Trudy, thank you for your time.
Thank you for having me.
Bless. And we're grateful. You guys have an amazing evening, and we'll see you on the next live. God bless.
Thank you. Good night.